So when you come to the bid ask spread, if I click on the SPY, you can see the ask up here is 507.08 and the bid is 507.01. Now, and this is after hours, and it's only a 7-cent difference. So that means if you click to buy it at 507.01, the most you're off is 7 cents. That's a liquid stock. You're not losing a whole lot of money getting in and out of a trade in this stock. Same thing with options. Now, if I come to the option chain and I'm going to go to the March 15th, the monthly, look at now, this is after hours. Now, when this market is open, these are penny wide more than likely. I mean, even after hours, you got 635 for this call option, 638. So the bid is 635, the ask is 638. That's only a 3 cent wide spread. That lets you know it is super liquid. Super liquid. Now, at the same time, I'm going to come to option. I'm going to find an illiquid option, and I'm going to find one on purpose to show you guys what something that's not liquid. Let's see. I'm actually in high options volume. I'm going to go somewhere else. Let's try. So what I'm trying to do now is find an illiquid option. And let's see. Let's try this. Let's go to, matter of fact, we're going to go to sectors, market indices. Let's go to the S&P, maybe 500. No, CRE, hospitality price return off. I'm trying to find something that is illiquid. So I'm going to come to, I don't even know what this is. CRE, residential price. So I'm on the TastyTrade platform, which is what I use 99% of the time to do anything. If you look up here, you see the star system. Real quick. They're giving you a liquidity rating. And I came to a sector that is illiquid on purpose. And you can see this one has 2 stars, 3 stars, 1 star. I'm going to go to one of these ones that is 1 star on purpose so we can see what an illiquid stock looks like. Let's go to this option chain. You can see we don't have as many. First of all, first thing you should notice is that we do not have a lot of expirations. So we're looking at CPT, Camden Property Trust. I'm going to click back on the SPY. Look at the SPY. So right then and there, that should let you know one of the things, even if you're not using TastyTrade and you come to the option chain and you see where you don't have that many expirations as opposed to something that does, this is liquid, illiquid. Automatically, I'm not saying that you can't trade something that is illiquid. I'm saying that maybe you shouldn't unless you really know what you're doing. Now let's go to March expiration. You see, now this stock is only $94.81. The SPY is 5 times that. Now look at the bid ask spread. Even though this is after hours. So when the market opens up, this will tighten up, but it still shouldn't be this wide. You see this? The ask is $4 and the bid is 80 cents. So that means that for this call option over here, you could pay anywhere between $80 and $400. Really, really wide. On Friday, only 7 people traded. There were only 7 contracts bought or sold at this strike. Let's go back to the SPY again. Same. We go to the monthly. 510,000 on open interest. Let's go back to CPT. Open interest, 7. 7 open contracts. Back to the SPY. 510,000. Now, excuse me. That right there, I'm showing you examples on how to identify liquid. I'm giving you an extreme liquid, and I'm giving you an extreme illiquid option contract. Even if you lose stock on CPT, look at the bid ask spread after hours: $103.70, $85.81. That's almost $20. So what that would mean is, if you're a trader, that means that you got to come in here, because if you just click the buy and you just buy it, you could pay, you could get filled at like 100, right? And it may only be worth somewhere around 86, 87. Now you could come in at the low area, right? And then try to penny it up. But I would say just don't trade this at all. You're gonna lose money trading stuff like this. Most of the time, you're gonna lose money. So you could depend on that's why I advise people to use TastyTrade. They just tell you what's liquid and what ain't. So if you come over here and, like, I got this pulled up, you look over here to the right, it got 1 star on the liquidity rating. So you could just stay out of it. Now, I'm gonna give you a normal. I took a real extreme, like despise the most liquid. So let's take a look at something like Apple. Let's go to see. Look at the option check. Look how many different expirations you have, right? So let's go to March. 10 cent wide. 10 cent. Look at how many contracts you got right here. 2,000, over 2,000 contracts. 37,000 right here. 30,000 right here. This is correct. 61,000. In some cases, you got more contracts here than you did in the SPY. Let's look at Tesla. Let's go right here. Look at it. Tesla is almost a $200 stock, 10 cent wide. So when you're putting on your option trades, you're getting filled uh, close to the bid ask spread to whatever you put in. Like, that means in here you may lose $5 on if you could put in the mid price at 830, you probably get filled. Now, if you were trading, let's say CPT, let's say you were trading this on in your paper trading account, it may fill you at a great, it'll fit. So you were selling this, it may allow you to sell this for $400, when in a real account you will probably only sell this maybe a buck 50. So it will make you look like you made 250, $200, $300 on this trade, when you really wouldn't have made that in a real account.